Hello everybody, and welcome to our Guru webinar. Uh, Today we're gonna speak on how to fit the right guru to the right market conditions in order for you or your traders to get the best rewards possible. Of course, with minimal risk. So basically what we're looking at. First, in order to understand what kind of guru you have to follow, you first have to figure out what kind of market are we in. Of course, when I say that, I don't mean the regular label of whether we are in a bullish or a bearish market, but rather if we are on a range market or a trend. Now, why is that important? Well, first, you have to know that short-term traders are especially beneficial when it comes to range market. Range market is a market trapped between two price ranges that moves rather slow, that moves in a rather short ranges and is confined to support and a resistance level. Short-term traders know how to benefit from this situation by opening on a lower range bullish positions and closing it on the higher end of the range. And the opposite, shorting on the higher end of the range and closing on the lower end of the range. However, if you are a trend trader or a long-term trader, you will find it hard to benefit on such situations because your investment will be confined to a range and therefore your gains will be rather moderate. So, if we want to identify what is the best guru we can follow, we first have to understand whether we are in a range market or in a trend market where rather a long-term trader can benefit better than a short-term trader which will encounter a lot of stop-loss orders. So how can we figure that out? Basically what we're looking at here is the euro dollar, which is, of course, as you probably know, a major indicator towards market sentiment. And through this pair, we'll use it to understand if we are in a trend or in a range market. What we see here is something which is very simple yet very helpful. We see in the red line the 14 days moving average, and on the green line we see the 60 days moving average. Now basically this is a classic tool used by many market experts to anticipate whether the trend is up, down, bullish, bearish, or of course range. Now what we see here is very clear where the short-term average crosses from below to above the long-term average. This is of course a bullish signal. Of course, if it would be the opposite, the short-term moving average would cross from below the long-term moving average. That would be a bearish sign. If we would be in a range market, then we will actually see the long-term average becoming in a straight line, and we would see the pair sort of confined between two levels of price ranges. For example, from the 1.26 to the 1.34. However, this is not relevant at the moment since we are in a bullish market. And we can also see that this bullish market has started on the 6th of February. We will later on understand why this is important. This is basically just repeating what I said. The short-term average will crossing the long-term average will indicate what kind of market are we in. If the short-term average crosses the long-term average from below to above, then it's a bullish market. If it crosses from above to below, then it's a bearish market. Anyway, what matters is that we are on a trend. Another indicator which will be useful to confirm we are in a trend and not sort of in a range market is by looking at the Bollinger Bands. Now this is a rather simple tool that what we do is we actually look at the movement of the pair. This is again the Euro Dollar daily, of course, and we look at what part of the band the pair is in. If it's in the lower part of the band, it is a bearish market. However, if it's in the higher level of the band, it is a bullish market. Of course, we can see in here that we are in the higher end of the band, which means we are in a bullish market. Okay, so we figured out we are in a trend market. So what we want to use is, of course, a trader, or we want to follow a guru that is best in following trends, not in range market. Okay, so what I'll do now is basically I will move over to the open book and start looking for my guru. Okay, so here we are on the open book. Now, as I said, I have to look for a trader which is good in finding long-term trends because we are on a long-term trends. How do I do that? Well, first you have to, of course, open the more or press on the more option to sort of refine the level of the filtering on the guru finder to be able to find your right guru. What am I looking for? Okay. Basically, when you look for a long-term trader, you have to figure out what kind of behavior symbolizes a long-term trader. A long-term trader will first have a drawdown, or a drawdown is of course retreat from his peak level of gains of maximum of 30%. More than 30% will probably mean this trader is using a lot of leverage and therefore is not really a long-term trader. A long-term trader cannot survive with high leverage. Another thing we would like to know is we want to make sure our trader risks in total no more than 30% of his portfolio. Okay, now that we have sort of figured out what makes a long-term trader, we have to focus on another thing. Of course, we know that gain is important. However, if I'll take a trader with long-term and low leverage with higher than 100% gain, this will probably mean that this trader has no more or not a lot more upside to go. The same as you watch the euro dollar, and if it's above, if it's close to its higher level, then you try to take your gains and follow a different instrument. This is the same thing. So what I do is I actually confine the level of gains to 50%, which means that this trader has more upside to go, at least in my opinion. This is, of course, not a mathematical rule, but rather a thumb rule that I use to make sure my trader has still more positive days in front of him. Of course, I will, although I want to confine his higher limit to 50%, I still want him to have sort of nice profits to make sure this trader indeed knows how to generate profits. Now, another important thing I would like to look at is winning weeks. Basically, winning weeks is the level of weeks in which the trader is positive. Now, basically, this means that a trader which is positive for 60% of the weeks is obviously a trader which knows how to follow long-term trends. Why? Because this means that in 60% of the time, this trader was positive, and indeed, on the long term, he tends to be positive. Okay, so basically what I'll do now is I'll move it closer to the 60% level. Now, after I finish this, the last thing I would like to filter out is, of course, the average duration of a trade this trader holds. Of course, if this trader holds an average trade of 1 hour, he's obviously not a long-term trader. So I'll try to confine it to a minimum of 1 day to at least make sure he's a long-term trader. Now, after I finish doing all those filtering, I will press on the search button to see what kind of list I get. Okay, so basically I get 4 different traders, which according to our filter will be rather good in identifying long-term trends. Now what I do and what I recommend is instead of just pressing on those traders and losing your filter, what I would do is actually I would open another tab and I would actually and just on the second tab I will just test each trader one by himself and make sure that this trader indeed fits to my filter. Okay, So the first trader will be Mr. Liberty. Okay, let's check this trader out. Okay, well, the first thing I see is although this trader has been rather profitable on the long term, we see this trader actually flipped during the last few months. Moreover, I see this straight line which symbolizes not a lot of activity in the last month. I will also, as you remember, we saw in the presentation that the trend has actually started on the 6th of February. So what I would like to do is I would like to actually check this period on this trader and see if this trader knew how to use this change of trend. Now what I see is not only this trader did not gain any more, but actually during the 6th of February this trader actually crashed. Although he's still a low risk trader, at least according to our filter, so he didn't crash completely. But we can see this trader obviously did not know how to use this situation. So this trader is not for us. Okay, the next trader is, okay, don't ask me to read it. Read it to yourself. Okay, okay, this trader as well doesn't look too good. This trader actually had 135% and fell all the way to 20. So basically this means this trader is not for us as well. Now let's try the next trader. Of course, as you see, I filter out most of the traders, and this is a natural process because investing in gurus should be a process very similar to cherry picking in stocks. Well, most are filtered out, and you should find the most quality gurus to place in your portfolio to get the best returns you can. Go back to my filter and try to enhance it in order to make sure I indeed get the best groups. What I'll first try to do is I'll try to actually limit the leverage on those deals and make sure it's no more than 50%. What I'll then do is I'll limit the average position towards 30%. Okay, basically just by playing with those indicators, I found another trader. Let's see if this trader will actually fit. Okay, so this trader actually looks kind of good. As you can see, this trader, although it had a bad days, is kind of on the horse, as you can say, or on the trend. If you look at his portfolio, you have to check first what is the average time he holds, which is 2.5 days, which is good for us. He has a good trade or winning ratio, although this is not exactly the highest parameter important when you look for a long-term trader, but it is still important to see that your trader has at least most of his trades on the positive side. You also say this trader is good in exploiting the pound yen pair, which is of course a good pair to trade on when you're looking for a long-term trade, since it tends to go up more than others. Now we can see also his open trades. Okay, we see the trader is pretty much bullish, which is also good for us since we know the trend is kind of bullish. And we make sure the trader is actually active. So we see his last trade was closed 5 hours ago, so this trader is actually active. Okay, of course, once I go over a trader, I just want to make sure this trader has what I need in order to generate the right profits. So first, I make sure most of his trades are either on medium or low leverage. I also see he has a lot of history. And of course, when I look at his trading graph, if we look at the period of the 6th of February, you can see this trader made pretty much pretty well during the flip of the trend. If you look at the last month where the trend has actually begun, you can see the trade has made more than 110%. Now remember the thumb rule of 100%. This is relevant for the entire year. We can see that for the entire year this trader is plus 33%, which is pretty much good for us. We see that this trader actually looks like a rising trend. So basically this will be a good trader to follow, in my opinion, for a long-term trade to identify what kind of to benefit best from the trend in the euro dollar. Uh, okay, guys, just to wrap it up, what I'd like to show you is how exactly would I identify an exact opposite trader or a trader that is better for ranges and actually benefit in case we were in a range market. Okay, in case of a range market, I will of course be much more forgiving on the drawdown weekly. Winning weeks will not be relevant for me. Win ratio, which is the best indicator for short-term traders, will be really important for me, so I'll guess I'll want more than 70%. I want his gain to be above 50%, of course, but still maybe less than 100. Okay, and of course I'll want him to be rather experienced, so more than 100 trade, because he is trading in high frequency, as you have to remember. Uh, okay, let's press the search. Okay, so we see two traders.
What do I do? Hmm?
Okay, we see his average trade is 13 hours, which is good. He has a 70%, 71% winning ratio, which is good. He has a really high frequency of trade, which is also good. And of course, he's on the positive side. I would use this trader in order to trade ranges, of course. However, we are currently not in a range, so I would actually prefer the last trader we used in order to benefit from a trade. Uh, okay, this is more or less for this time. I hope you enjoyed this webinar. Next week, I will provide more and more helpful tips for you how to identify the best guru you can and make the best possible returns. Thank you very much. This is Lior, Senior Analyst at eToro.